So let's just run through some of the details. BB&T and SunTrust merging to form the sixth biggest retail bank, as Sarah mentioned, by assets. Their combined assets will now be $440 billion, combined market cap $66 billion. Both banks are focused in the Southeast region, and combined they'll now be the third biggest bank in the region by deposits, behind Bank of America and Wells Fargo, whose stocks did fall today in light of increased competition. So did JP Morgan's, who have a big presence in Florida. It is an all-stock transaction. It'll see SunTrust shareholders receive a 7% price premium and end up with 43% of the total. BB&T will have 57% of the total. And the deal does strike a sort of perfect sweet spot, Sarah, because the combined bank will be below the $700 billion threshold of assets. That would mean they'd become a G-SIFI, a global strategically important financial institution, and therefore face more stringent regulation. And there are plenty of synergies, including the ability to close down branches. 24% of their branches apparently within 2 miles of each other. And all those factors, and the fact that neither is paying a premium to doing a takeover, is why both banks are moving higher off the back of this.
I mean, clearly the market likes this deal. Two things I've heard. Number one, the synergies, the 12.5% savings, seems conservative because there's so much overlap between these two banks. Is that something that you're hearing as well? And number two, what does it say about where we are in the economic, credit, and banking cycle that such a massive deal, the biggest since the financial crisis, is happening today?
Yeah, two perfect questions. I think the first one, yes, people think there could be more cost synergies, but I guess on day one, just guessing here, they don't want to talk up how many branches they're going to close. They don't want to talk about layoffs. In terms of where we are in the cycle, this is, whether this is an exciting, forward-looking merger or is this a defensive merger given the environment, I think people are leaning towards the latter a little bit. So yes, it's a little bit late cycle. Yes, it's also them trying to compete with the extraordinary spend on technology that the big banks are doing. And this gives them a sort of chance to do that. It doesn't guarantee that they'll catch up on that technological uplift. But just one final point. You're saying that the market likes it. Yes, for them. Yes, for some of the smaller banks still who are now seen as targets. Yeah. The big banks declining, though. And it's been a big shift of money today out of the bigger banks into the smaller ones.
Doesn't help that yields are lower across the curve. No. We had the CEOs on Squawk on the Street today. They finished each other's sentences.
I know, it was adorable.
It was a love fest.